We're seeing positivity in the South African markets. Asian markets weren't so lucky. We did have a mixed day there, but it seems that overall we're starting to see a bit of positivity filtering through. We're talking about Bush-era tax cuts in the US, perhaps some more stimulus out of the Eurozone. What do you make of all this news?
I think that commodity countries are doing very well today. I think Australia's share index was at a 3-month high, and South African index now looking quite strong again today. So I think people coming into commodities, we see gold at an all-time high, we see platinum moved up beyond $1,700 an ounce. So the commodity price is really looking firm. China came out with record production of vehicles. That's supporting platinum, and I think people putting money back into our market, back into the big miners and the platinum shares, and that's driving our index up.
It seemed at the beginning of the week, of course, yesterday when there was talk about quantitative easing 3, many people were quite concerned. Do you think that there's still a lot of concern, or do you think there's going to be a positive factor going forward?
I think that the recovery is slightly slower than people are expecting, and they expect maybe that the Federal Reserve had to put in more quantitative easing to help get that American consumer back up and running again. And quantitative easing is going to lead to extended increases in price in the stock market. So for the stock market itself, quantitative easing is good. It will lead to increased prices. Though the fundamentals of some of the stocks, the valuations are really at full valuations at this point. But the stock market can overrun those valuations as long as there's enough liquidity in the market. So extra quantitative easing, very positive for the market as such, but the long-term view of it is obviously a bit negative.
Rob, the Shanghai market's still coming under pressure. There's still talk about a possible interest rate hike, and news reports out of that region say that the People's Bank of China could hike rates as soon as this weekend. What kind of impact is that going to have on the overall commodity picture?
I think that they're trying to slow down the housing bubble that they're starting to create in China. And the only way they really can do that is increasing rates. Obviously, it will affect the market as those interest rates come up, but it's such a huge economy. There's so many people coming into urbanizing in China that it will be quite difficult to slow that amount of production, the amount of houses getting built in China at the moment. So yes, initially it has a slight impact, but the following month or month afterwards, you still see that there's growth coming through from China. So initially it'll have an impact. You'll see a bit of a sell-off in the markets, maybe commodity prices dip slightly, but then you have to just wait 1 or 2 months and you see that China just carries on. It's very difficult to slow China down at the moment. So short term it does have an effect, but really what has to happen is that they have to have a real reduction in the amount of production that they're producing. So I think only in the short term you'll see a dip in the market.
Rob, looking at our resource counters, they're doing relatively well today, despite the fact that the local currency is also strengthening. We're sitting at around 6.88 to the US dollar. Where do you see resource stocks going from here onwards? It seems that there's still a lot of bullishness surrounding these stocks, despite the fact that the local currency could be a dampener.
Yes, well, I think people are still going into gold as a hedge against the sovereign debt in Europe. So that the commodity there on gold should still be very strong and stay above 1,400 until that sovereign debt issue in Europe settles, and maybe we can even see 1,500 on the gold price. On the other commodities, we're still seeing China producing a lot of vehicles that we saw today. And as long as those type of numbers come out, we start to see an improvement in the consumer in the States. Commodities will carry on moving up along with the oil price. And so we could see this inflated prices of commodities at least to the end of the year, and we'll have to wait and see what happens in the new year.
Looking at the reserves data that was released in South Africa earlier today, disappointing the market. Most investors had expected a slight increase there. Gross reserves and the likes of forex and gold reserves all down quite slightly. Do you think it's something we should be reading into, or do you think we'll see a recovery going forward?
I think we'll see a recovery going forward. I think that the strong rand is hampering obviously some of the reserve ratios, etc. And I think maybe depends when they pull that exactly those reserve ratios out on a specific day and what rand price they used on that specific day to get those reserves. So I think that there wasn't a very big move from them, and I think we're still looking relatively good. I think that our import ratio to our exports is about 6 months, and slightly better than most emerging markets around the world, the norm around the world. So we're still looking relatively healthy.
Steinhoff says that it's going to expand further into the African continent, a company that already operates in the UK, of course in the Asia-Pacific region, and also in Southern Africa. It is looking for those interesting acquisitions and, of course, various opportunities going forward. What is your view on this company? I mean, at the end of the day, we know that they've had a very good October-November period, but we also know that the currency and the fluctuations in the local currency could have an impact on margins.
Yes, I think obviously the strong rand is hampering their local earnings. But I think overall they're looking very solid. I think they've weathered a very big and difficult storm for the retailers over the last 2 years. They're looking really good. They need some extra growth out of Europe. Europe's growth is still looking really weak for the next for the foreseeable future. And I think they're looking for growth, and Africa is the way to go. You have to be careful how you enter the African market and make sure that you buy the right assets. But I think it is the way to go, and look for growth in Africa is definitely the way most companies are going. As you can see from Standard Bank, though, if you get it wrong, it can delay your growth indefinitely. So you just have to make sure which assets you get in, and you just buy them at the right price and where you can get returns relatively quickly.
Rob, where would you be? At what levels would you be buying Steinhoff? We're sitting at around 22 rand.
Any dip into the low 21, there's support around 21 rand. I think that's a good level for now. As I said earlier, the retailers are fully priced, but with this, with growth going into Africa and people looking for exposure, they can still outperform. So I think any sell-off round to the 21 rand level would be somewhere where you'd start to pick up some more Steinhoffs.
Rob, it seems that sovereign risk out of the Eurozone is also still on the agenda. That said, we know that the JSE All Share has fared relatively well this year. Would you be shorting the markets at this point in time? What would your play be?
I wouldn't be shorting the market at these levels. I think that if you're nervous about how much the market's run up, I'd stay out of the market, but I'll be very careful to start shorting this market before it actually starts to take a correction. We saw earlier last week that we started having a bit of a correction. The stocks moved down quite nicely, 3 or 4%, but as soon as they start to get around the 5% level, the buying comes back straight again, and you start to see that buying pressure come straight away after about a 5% dip. So I would be very loath to be shorting the market now, and if you're worried about it, I'll just stay out and wait for a slight dip, and then I'll be a buyer again.